NIO stock closed Tuesday's trade at $4.50 per share, down around 10 cents or just over 2% on the day. While it might not sound like much in dollar terms, for a stock like NIO that's been bouncing around the lower single digits, every move matters, and the direction of that move even more so. Now, the session began with a flicker of hope. There was early enthusiasm, NIO opened higher, and for a brief moment, it looked like the stock might rebound from Monday's dip. But by the 30-minute mark, that momentum faded. A steady decline followed, and by the close, NIO had given up those gains and then some. So what's driving this? Let's break it down. First, we have to acknowledge the shadow cast by Monday's delivery numbers. NIO's vehicle deliveries in the most recent update came in slightly weaker year-over-year. Now, in isolation, this data wouldn't necessarily cause panic. But coming off several sessions where there was growing excitement around a potential breakout, this data point felt like a letdown. It wasn't a disaster, but it wasn't the fuel the bulls were hoping for. Second, we've got the broader market context. The major indices were down during Tuesday's trade. The Nasdaq and S&P both saw red, and risk sentiment more broadly was a bit shaky. In an environment like that, growth stocks, especially ones that are still working toward profitability, tend to get hit harder. NIO is no exception. So even if there's company-specific optimism, macro pressure can easily derail that momentum. But let's zoom out for a second. Is this the end of the road for NIO's recovery narrative? I don't think so. Let's not forget that even after back-to-back red days, NIO is still well above its lows from earlier this year. The stock had a nice run recently, and a pullback isn't necessarily a reversal. It could simply be a cooling-off period, one where short-term traders take some profits while long-term investors reassess. Now, speaking of long-term, one of the more overlooked factors in Tuesday's session was the continued chatter around NIO's potential profitability. There's been speculation for a while now that the company is inching closer to break-even. And while this week's delivery numbers may have dented that optimism a bit, the trend toward improved efficiency and tighter cost control is still very much alive. In fact, many analysts believe the company is just 1 or 2 quarters away from posting a surprise to the upside on the bottom line. Another angle that shouldn't be ignored is NIO's battery swap technology. As competition in the EV space heats up, particularly in China, NIO's focus on infrastructure could prove to be a key differentiator. It's not just about selling cars anymore, it's about building an ecosystem. Tesla's already proven the value of that strategy with its supercharger network. NIO is following a similar path with battery swaps, and while the market hasn't fully priced in that long-term potential yet, it's something to keep on the radar. Also worth noting is the recent uptick in institutional interest. Several large funds have reportedly increased their exposure to Chinese EV makers, including NIO. While that doesn't guarantee a price surge, it does add a layer of credibility to the investment thesis. Institutions tend to be forward-looking, and their willingness to step in, even at these levels, suggests they see value here. And let's not forget sentiment. Yes, sentiment can be fickle, and right now, it's a bit bruised. But it wasn't that long ago that the tone around NIO was overwhelmingly bearish. What we've seen in the last couple of weeks is a shift, albeit a fragile one, toward cautious optimism. That shift doesn't evaporate overnight. It might pause, it might waver, but if the broader market stabilizes and NIO can deliver a few strong data points in the coming weeks, sentiment could firm up again quickly. Looking ahead, one of the key catalysts to watch is any update on domestic EV subsidies in China. The Chinese government has been vocal about supporting the transition to new energy vehicles, and while there's always uncertainty about how long that support lasts or what form it takes, any positive news on that front could be a tailwind. Another catalyst? Earnings. We're getting closer to NIO's next quarterly report, and expectations are being quietly recalibrated. If NIO can show not just delivery growth but also progress on margins and cost control, it could spark another leg higher. Technically, the $4.50 level is becoming an important psychological marker. It's a round number, and traders often watch those closely. A bounce from here could trigger some short-term buying, while a breakdown might test support around the $4.20 level. But again, this isn't a broken chart, it's a consolidating one. Now, I know some investors might be feeling a little frustrated. Watching a stock open strong and then fade throughout the day can feel like a gut punch. But that's the nature of trading around inflection points. Volatility is part of the deal, and with NIO, it's amplified by the fact that the company is still in the middle of a very ambitious growth story. So, Where does that leave us? I'd say cautiously bullish remains the right posture. Yes, Monday and Tuesday weren't great. But they don't undo the broader progress NIO has made. They don't erase the potential. And they certainly don't mean the breakout narrative is dead. Instead, we're probably just seeing the market digest a few uncomfortable truths, like the fact that breakouts are rarely clean or easy. They come with false starts, pullbacks, and head fakes. What matters is whether the underlying fundamentals continue to improve, and for NIO, that story is still unfolding. So as we look toward the rest of the week, keep an eye on broader market conditions. If the indices can stabilize, NIO might get a chance to regroup. Also, watch for any analyst updates or price target revisions in response to the delivery numbers. Sometimes it's not the data itself, but how the street reacts to it, that moves a stock. In closing, this isn't a moment to panic, it's a moment to stay informed, stay strategic, and stay focused on the long game. Because for those who believe in NIO's vision, these kinds of days are just part of the ride.